So thank you everyone for coming, including all of you that are online. We are Gotham RE Group, and we wanted to show you a little bit about what we're doing with Gotham Capital Services. And we have one of our private money lenders from Long Island here with us today. Who's going to go over a little bit about underwriting guidelines and what is expected. So I'll kind of let you go, and then I'm going to throw some questions at you. Sure. And maybe some of us in the room will have a few questions, and some of you online might have a few questions. Just go ahead, if you're on the Google Hangout, plug that question in, and then we will answer it live.
So what makes a deal? A lot of people come up and approach me and basically give scenarios. So what they do is they ask me, what's the terms and how much, right? And what I say is, we customize every deal. There's so many variables, so many qualities that make a deal. We look at loan to value. We look at terminal loan. We look at the appraisal. We look at the title. We look at future projections. We look at the person's resume. We look at the person's credit. So in that sense, when people come up and say, well, give me a rate, I got 10 million people look at it. It's virtually impossible. We specialize in traditional and non-traditional. What does that mean? Traditional means that you go into a bank, they offer you 5% for 10 years, and they close in 60 days, right? As we know, most likely it'll never take 60 days, probably goes to 90 days. There's always a hiccup. They're never really black or white, it's always a gray area. Where non-traditional, we give an approval within 3 days. And so if you come to me and say, here's all the information, as long as the appraisal and title are clean, we're ready to go, we write you a check, have a nice day, we'll see you 1 year, 2 years, 3 years, 4 years, or 5 years, how long we customize your loan. Examples. We are working right now with an oil company out east on Long Island. They own the real estate, it's worth about $3 million. We have the title and appraisal. The gentleman came to me last week, and he said, look, I need to buy the houses in front of me, I want to extend. I need about 15%, and we're ready to close. So, I mean, things get done. People worry about the rate, but again, when you pay for rate, we're injecting the risk factor. So the gentleman that happened to borrow was about 700 credit score. Again, he didn't need to do a phase 2. He didn't need to do environmental. He looks to pay us within 6 months, but we give him a little cushion. And, he's happy and we're happy. So everybody's happy. So I don't know if you have any questions.
That's exciting. Gosh, 3 days. Done.
Yeah, we have a lender out there. Because how I work is I have a conduit to $40 million where I'm representing a few partners, a law firm, and property private equity groups. Or if I look at the client and I see that it's traditional, I'm not going to send them these non-traditional rates. I'll bring it to presidents of banks, underwriters of banks, chief lending officer of banks, give my background history, where I was a lender for 15 years.
Awesome. So,
I'm always looking to save the client money. It's not about the rate.
That's always it. And it's about, for most of our investors, it's always about how fast can you close,
Correct.
How fast can you get something done. They want to be able to go into a deal and say, hey, I have all cash.
Mm-hmm.
And they come to a lender like you to provide that all cash.
Absolutely.
And close in 7 to 10 days.
So that fast.
That fast, yeah.
Yes.
That fast.
Yep. Title takes about 5 days, but we sometimes expedite within 3 days. So you give me a deal, I go out there the next day, I underwrite, I look at it, as long as I'm with the financial information, present it, they like it, they come out there the following day, they send them back to the borrower, review with their attorney, they sign, they pay the $500 for the title cost, and then we're ready to close.
This is an asset base.
As an aspect,
Yeah.
correct.
And then what is your point?
For me personally,
Yeah, lender.
2 points.
4 points.
Right, so
Never
Gotham
mind.
Capital Services always charges 2 points, and then the lender, will have a certain amount of points on the
Right.
loan.
See,
So it's
question, it's based on the risk.
Right.
So if you're giving me you say you have a previous environmental issue, right? That's a riskier loan.
Yeah, it's
So it's going to be a higher rate of return for the investors. So that's why I don't really quote. I can tell you we've done loans as little as 6%, and we've done high as 20%.
So the minimum was a starting what the percentage?
Oh, sorry?
It's
Minimum
as
5%.
low as 6% and as high as 20%.
But for a traditional bank, I've seen.
No, don't try talking traditional.
Well, no, because, you know,
So
a
you do
lot
more
of
this is a-
money, you do more money.
Or
That's
3 months
right.
taking.
Correct. Another thing that we do is that we also offer second and third position loans.
Oh.
Those are-
Oh, that's huge, I didn't know you did that.
Absolutely.
That's big.
Absolutely. If you might have a hard money loan as it is, he doesn't renew for another year, he needs a quick $50,000, a quick $200,000, we put a second and third position on it.
To what ARV and or LTV?
We go up to 80%.
So 80% LTV. Now, that can get tricky. So let me just tell you about loan to value.
LTV means the actor operator.
Let me say what I mean, because every lender thinks differently. So some lenders will figure their loan to value ratio based on the after repair value, and some will base it on purchase price.
Correct.
So which are you looking at?
Yeah.
See, again, that's a general question, it's on a scenario. I
Right,
have a fix and flip program, which
yes,
is 10% down. So if you're purchasing a new building, right, you're putting down the purchase price is $500,000.
Right.
You need about $150,000. After repair, it's worth $900,000. We're going to be after the repair.
yes. So
Okay? And
it's
we don't
very
really-
have, because, right, so, and then you need to provide a draw schedule, so that's why, for instance, when we have you go out on jobs, to get an estimate, it's because, on the financing, we have to provide the draw schedule and the construction estimate at the time. Thank you so much.
That makes absolute perfect sense.
Does anyone need ice?
Oh, yeah.
I had to run and get some ice. Oh, I'm so sorry about, and she bought some gummy bears. I don't know the gummy bears. Gummy bears. There we go. All right. Anybody needing ice? We had one out of okay. All right,
So,
so it is.
for example, I have a meeting, I'm going through these off-market, I have a whole massive list of off-market deals. You know, and obviously.
Off market gets you the higher LTV,
Of course.
90%. So, again, the 90% is general, I don't like to be so general. That example is an off market deal. The contractor or the person has been doing it for, do have a resume, they also have a construction company or some type of business, right? So if you own houses and you work for a bank and you have a W-2, and you decided you want to be a contractor for houses, it's not going to be a 90% LTV. I'll tell you that.
Right,
Again, it is going to be the
experience.
aftermarket value, correct.
So these are more on a
Only for
commercial type of
Absolutely,
project,
same.
these off-markets that we have.
Correct.
Well, 2 to 4 family and up. So what's the highest? I noticed you mentioned something about 400 million line of credit. Is that what you said? Up to 400
We have
million?
400 million, yes, so the fund is 400 million.
Okay, but they're not gonna put they're not gonna put 400 million all on one property, obviously. right?
Absolutely not. Their
Absolutely not.
lending
They
limit
want-
will be about 20 million.
20 million
20
max
million, yeah.
on one.
So again,
Right, that makes sense.
It's very general, why? Because there's other groups that participate in the
Of
loss.
course.
So you might have another hedge fund that says they're $1 billion and they're looking for a allotment of 300 million. They say, you know what, we'll go in half and half, we'll go 55 LTV for, because the average skyscraper is $30
That's
million dollars.
Exactly.
But they're not gonna lose because that's a big chunk of change. I mean, this particular law firm, it's a board of directors. They come in, they present the deals every Thursday. I'm actually going there after this. And they say, okay, we'll approve it, deny it, approve, deny it, approve, deny it. So they also have to sign off on the deal. So it's not one particular lender. One particular attorney that signs off on it. So it's like board, no, yes, because it's their client's money. So
Now-
they're acting, it's their money and their client's money, so they don't foolishly lend out.
So they'll do
They're very creative.
55% of LTV.
They'll go up to 70.
They'll go-
Again, they'll go up to 70, depends on the deal. I won Astoria. They knew that the property is worth $3 million and I needed $700,000. It's scenario land. The guy didn't have any W-2s, but they're crafty, they're intelligent, they're willing to
See the value.
They see the value, correct.
Wow.
Now, let me talk about
Yeah.
this, let me
It's
talk
very
about the
effective.
little, scenario, because, when we're in the business, and then for some newbies, or, people that are used to dealing with conventional financing, they're not understanding the difference between You're saying 30% for 5 years. Let's say the building. The after repair value of the building is going to be $20 million after you finish putting $2 million in construction. So they will lend you $7 million, which is 70%. You need to come out of your pocket, skin in the game,
Right.
with 30%. Okay, so that is $7 million, and then they'll get escrow the other $2 million
For your construction.
for the
Correct.
construction.
Three
Totally,
phases,
yeah,
yes.
I totally.
You're gonna have the origination phase, which is where you start the construction. Look at it and says that the jobs that they're done.
Mm.
You have the second stage, which is 2/3, and then the final stage.
Awesome. Actually, 3 draws is awesome.
Yeah.
Some projects of that.
Yeah, no, they phase it out.
Okay.
Of course, I mean, that's like a no-brainer, I wouldn't see
It
anybody
means a
not.
post.
I mean, my God.
So you say
Yeah,
We can't.
yeah, because
Yeah.
that does take possibly hold $7 million. Yeah, so we have a scenario with that totally on the campus as well. We're holding back.
They want
We want 27 million, yeah. No. If they are
On the drawer.
totally different.
The drawer.
Oh, yes. We're talking about something else. We lend to a client out in the Hamptons. He has $12 million out outstanding. What he's doing is he's selling as he goes, but he needs,
Of
so he
course.
sells, takes the money. When
Exactly.
you sell each in particular condo,
Mhm.
right? The lender is getting 80%, the contractor is keeping 20.
Okay.
So it's kind of reversed, but yeah, he's also the owner.
But on the construction draw.
Correct, yes.
When you provide the lien waivers, you're giving them 100% of the draw, or you're holding back 10% in reserve.
You're pulling back 10%. It might be
That's
something
another
like 20%,
aspect
and
of it.
yeah,
they also
normally it's always
qualify,
10% in
they're
reserve.
doing the due diligence homework on who the contractor is, because a lot of people like, oh, maybe well, my brother, it's my cousin, it's this, it's that, and then the money was here and there, so it's not easy process, but it's.
Now, how about the inspections? What's your usual process for inspection? Do you physically come out and look at the property, or do you send
Absolutely. They
pictures
send
or
their own appraiser in there. It's
Oh.
covered by the client,
on each draw
each
to make sure everything's done?
correct, certified appraiser.
Now, do you have a schedule that you like for everyone to submit to you?
They have to before it's approved.
Right, but do you have a schedule? You want them to just come up with a schedule, or do you have like a Excel spreadsheet that basically says, because I have an Excel spreadsheet that we provide to some,
Yeah. you
that
can-
kind of like, okay,
Right.
you know.
And then the underwriter over there looks at it and then they discuss it.
Awesome, exciting stuff.
So, in other words, like you, like, let's say a contractor, you know, let's say came to the table, brought you a client, which I have a client in mind, I have a meeting on the 28th at 4. So let's say I bring you the client and I like the contractor.
Mhm.
So how does that work as far as getting in there and working?
Yeah, as long
with
as
the-
he's, He's New York State licensed, registered.
Well, she's the contractor.
I'm the contractor.
Yeah, I know, it's so
I'm
hard to
the
see.
builder.
Because you
It's
said,
so hard to
I have a
see.
contractor, that's why.
No,
And
no,
then,
no,
so
I-
when she's the contractor, she
I-
puts on some boots and she
Yeah,
like
no,
goes in there,
all right.
she bangs
So
out.
so in this scenario, you're the contractor, your
That's
client's
right.
bringing you in.
right.
Yeah, that's fine.
But
They
he
approve you.
does, right, this is the
Like I said,
thing,
with
I
your
get
resume.
development deals all the time.
Correct.
Like I said, I have a massive list
That's
of
fine.
off-market projects right now that we're going through
Right.
Property Shark and seeing what's what
Correct.
and what's worth doing anything with.
Correct.
And then I just bring the developer, or like, for example, I have a guy that they put in, they want to go into like real estate development, but they're wanting us to do it. And so what we do is like, okay, he's putting up $4.8 million. What I do is I now bridge the gaps, bring the financing, and decide what buildings we're gonna develop and buy.
That's where Gotham Capital Services come in. And so you would basically bring that developer to us. We would handle getting the loan done, get it sent out to the lender. And so that's why we wanted you to come and see what we do on
That's
the
awesome.
lending side.
That's awesome.
Any other questions that haven't been answered? No, okay, so I know that you have very tight schedules, and you two have a very important meeting. So basically, what I want to do, what I'm going to do now is go ahead and get you started, and then I'm going, because I'm going to go over the training part of our e-group on how the database works. Use the database to put your off-market deals in that database privately, and we'll go through that. So this was not intended to be a long meeting. We have one other lender that actually went to our error. So, unfortunately, we're not finished this meeting then, so let's talk about convention.
So,
Okay,
when I act as a broker.
Let's go, we're not finished.
Okay, yeah. So when we go over the tax returns and the financials and the credit reporting and et cetera, et cetera, et cetera. If the client qualifies for a traditional bank loan, which LIBOR plus 30-day LIBOR, which is like less than 1%, and the bank says 1.25, but 2%, 3%, 4%, 5% rates, we act as a broker, we charge 1%, which is the fee that the bank would charge. We have 99% of the time, we have the bank waive it, so it's no cost, no processing, no upfront fees to the borrower. We have that capacity, yeah. But again, takes 60 to 90 days.
That's right.
We let you know within 2 weeks. The turnaround time is not as fast, but again, it's ethically bounded to the borrower.
So now I have a question for you, because here's the deal. Here's what's gonna happen, guys, I need to put this all together, because this is very important. First of all, you're gonna take out a bridge loan, okay? So you're gonna
Which is
take
like
out
2 years.
the bridge loan.
I heard about this today.
Correct.
The bridge loan is not 2 years, I mean, it depends on the project.
Depending on the project. 5 years, 6 months, 3 months.
I don't know how to take you to finish it.
Right.
So, it could be a small project. Yeah, 30 to 60, no, 30. Let's say 90 days, 6 months, a year,
Correct.
18 months, for the project. Now you need permanent financing to finance out the investors on the, on the deal. So now you get to come back, refinance that deal now, and we know what the after repair value is. And so now you're gonna provide, so tell me on a refinance commercial, because this is very, I'm gonna ask you 3 separate questions.
That's fine.
Refinance commercial in an LLC name, or does it have to go in the person's name? And now, so in the
Banks will not
LLC
lend
name,
to personal at all. Foreclosure laws in New York State are horrendous, that they're made for the work as opposed to lenders, so banks have to form an LLC. In a bar commercially, there is scenarios where doctors.
What if it's a corp?
pass
So,
through-
so what if it was a corp or something?
That's perfect. That's fine.
yeah, so it's all in
But again, once you're looking for, once you're borrowing as an LLC, right? Traditional bank is gonna ask for leases. Last year, our bank statements, why? Because they wanna make sure the money's going into the leasing, the bank wants to see that, and then look at the personal credit, because you're still the guarantor.
Right.
Regardless if you're protected by a corporation, they still look at you personally. And they look at your company and make sure if you're borrowing, or you're paying yourself and it's 50% owner occupied, your income is paying off the lease, that's paying off the note. So now we gotta look at your personal company that's inside this corporation, so we're looking at tax returns on that. And either real estate company tax returns. So there's a whole bunch of stuff that you need. It's a pretty intense package.
So let's say it was non-owner occupied apartment
Okay.
building.
So 70% LTV, that's the max right now that I've seen.
Not,
Based on market value, so let's say you
Not
got in
occupied.
that. Let's talk about that one we have on Essex. Here's a
oh wow,
perfect
that's a
example.
perfect example.
So, okay. We fall into it for 11.2,
Right,
3.8 million to fix it up.
Okay,
right.
And after repair value would be 25 to 26.
a bank that I know in Bushwick,
What?
because they don't do construction loans.
And most,
You gotta say,
You're gonna borrow money to do that.
correct. They're not.
No, we're
they're
not,
gonna do it. They're
no,
not
no,
gonna
no,
do it.
no, you got confused. You
Yeah,
got
we're talking
confused.
about.
First, we're talking about the bridge, I'm gonna take
Wait,
this
are we talking
down.
traditional?
First, we're gonna talk about we're gonna take it from start to finish. So first,
Okay.
we bought it, 11 so first it's a hard money loan.
Okay, so you're all,
So
11.2.
11.2 purchase.
Okay.
Okay, gotta put down 30% on 11.2.
Traditional bank.
No, hard money.
Hard money doesn't go up to 70% like that.
We're talking about only the purchase, the after repair value
Okay,
is 26 million.
okay, all right, we're assuming it's the best credit, we're assuming that everything came out perfect, it's A-rated appraisals, right? Because hard money
After
typically,
repair value on this property is 26 million.
okay,
We're purchasing it for 11.2.
okay,
So based on what I thought I understood,
you are correct,
30% down on the 11.2.
correct,
Okay, and then the construction on it is 3.8 million. So we're gonna escrow 3.8 million into 3 draws.
correct,
Now, we're into the property for a total of 15 million hypothetically. The after repair value is 26 million. The property is finished, it's a
Okay.
year later.
Mhm.
Now we come back. Hey, Alex, we now need conventional financing. This is an apartment building with 1 store downstairs,
Yeah,
Two
yeah,
stories.
yeah, I think
I
it
would
was-
say,
2 mixed
you need
use.
to wait another year till your tax returns are in play, you need to show the rent rolls.
Ah,
Yeah,
so we hold on to the interest-only loan
You have to.
for 2
Because you
years.
need to have 1 year of
Yeah.
tax returns that show a positive cash flow to can afford the debt service of the
Uh,
$20 million.
conventional loan.
Correct.
Or,
You need to see every lease that's
that
in that
so makes
building,
sense.
we need to see all the tax returns that are in
Yeah.
that building, we need to see the personal
2
borrowers.
years.
Correct.
Okay, so another scenario is
one
we're
year.
fixed, 1 year, 1 year.
It's a really good way to
Okay,
put it.
another scenario,
That was a good question.
we're finished with the building. Now, instead of us refinancing out of it, we're just gonna sell it. So now we're gonna sell it,
So, I don't wanna confuse you, but the 70%, that's a fix and flip program where you have 1 year to sell it. You could extend it to
that's
11 years.
only 1 year, so you have to sell
You
it
have to sell it,
in 1 year. You can't refinance.
correct. If you're gonna
Because
fix
you
and
won't
flip it-
have the tax returns
Correct.
to show the rent rolls.
Correct.
You
Okay,
wanna accept bank statements on rent rolls?
Absolutely not.
no, but
This is
remember,
not
we
for
just
that.
finished the
Believe me, I
building.
had every scenario.
We just finished the building,
So
so there's no rent rolls.
Exactly,
We
it's just a flip. We did
And
another
I'm walking-
scenario.
Yeah, I'm walking down one scenario. I'm walking down one full scenario. So, okay, we can't, so we have to sell it, it's a fix and flip.
Mhm.
So now, we're gonna flip it, we're gonna sell it to someone else. But that someone else is not gonna be owner occupied.
Mhm.
So how much does that person need, what kind of criteria would that person need? Because still, the building just got finished, so it's vacant.
Mhm.
So now what?
So now, they're looking for traditional banking.
Yes,
Same thing, they're gonna, their business is gonna have to buy, they're gonna have to show that there's future projections that could rent it out, they're gonna have to show me that it's gonna be leased out. They're gonna
yes,
show me that this gentleman knows what he's doing, he's gonna come with 30% down, he's gonna have to show that he's in business as well. He's probably have to cross collateralize with something else that he owns, he's gotta be somebody, basically.
Exactly.
He's not gonna be like a guy who's just decided that he wants to own buildings.
no, of course not.
Without high net worth, so I mean, there's.
High net worth, so it's okay that it's a vacant building,
Mhm.
and you're gonna look at the market value and all the comps,
Correct.
blah, 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 and what the rent rolls
Well, they
are.
look at the appraisal, you know, the bank sends it in, they
Yeah,
take a look at it, and then you can say, I am going to rent at XYZ, I have signed leases for XYZ, that's gonna be, like I'm doing that scenario right now with a car wash, he's building a new car wash. Five Burgers is gonna go next door, they guarantee 150,000, the gentleman has his own car wash, he's saying, I'm cross collateralizing my cash flow from my current car wash to the new car wash. I'm also putting up my house, putting up a building, so he's gonna get approved. You know,
Exactly,
yes, it's gonna be
exactly,
You
because
want
it's gonna
secure
be,
law?
yes.
You want to secure it all?
unsecured in a second position, yes.
Right, so let's talk
Well,
about those.
consider-
By the way, this is so great that you are, I mean, I'm loving this because I'm like,
Yeah.
I'm
That's
an
why we
early
invited you,
contractor tapping into this massive, massiveness
Yeah, yeah.
procurement where where the profit margins are amazing. And I'm like, wow, I could buy buildings just by showing the type of finances, as you will, tax returns, bank statements for a year, 2 years, and dang, I can go out and get a conventional loan on a nice building.
Yes,
This is freaking incredible.
yes. And go ahead.
No, I was just saying, make sure you speak to somebody prior to that, because you gotta tidy everything first.
Yeah, everything has to be
That's
tight,
really
and that's what our job is.
Yeah.
So before you see him, and don't make the mistake of thinking, oh, I'm just gonna call Alex directly, no.
I won't have time to help you from start to finish.
Yeah, no.
I'll just call her.
That's where we come in.
And you
We
feel
will
the
package
She
you
sends a
up.
complete package, the
Yeah,
best.
we'll package you up,
Everything.
make you real pretty and tidy, and say, oh no, we can't even talk until you fix this, and that. And then we have to do this, and that. And then we send him a beautiful little picture that he can take to his investors.
Correct.
Okay.
That's what really.
Yeah, 3-day approvals.
Right. We need 3-day approval only because we made you look nice and cute.
Exactly, wow.